Hello everyone, this is the Peaceful Trader, and this is a special video release that I wasn't planning on making, but I thought that I would make with all that's going on at the moment with the our lovely virus friend and the stock market crash. So I thought I'd do an analysis to see where the market is going as of today, 20th of April. I'll say straight away that I do not trade stocks or indices. However, this might be an exception because of what's going on and the huge moves that are happening and the opportunity that's at play right now. So I thought I would analyze using our system just to show how it works, and it actually happens on all markets, and the stock market is no exception, and it's a huge market and also manipulated, and therefore we can use our stop hunt techniques and manipulation, recognition of manipulations in the stock market as well. So let's have a look and see if we can project where price could possibly go and where it's going to continue to. So I thought I would start by just looking at what happened in 2008, the famous 2008, and then see if we can notice any differences and use it to our advantage for today, for 2020, 12 years later. So we know that things repeat themselves, pattern repeat themselves, although of course not always, but let's see if we can figure it out, if we can see any similarities. Right, so we have 2008, we have the market trending up heavily up to that point, and then we have at the beginning a top here across the top, and the market started to move down. So if we play it forward right now, looking at the daily chart, we could see the market started to crash. We had a drop here of about 19%. So now that the drop has started, what we look for when we want to see the next move, to anticipate where the next move will happen, we identify that we have the trend, a new trend now. We have the move down, and what we want to see is a retracement to a level to manipulate one of the stops areas, one of the liquidity areas. So we have the move down, we have the market stalling, and we have a retracement, and we identify one of the levels where the market is most likely to take out the stops and continue on its manipulate at that level and carry on its move down. So we're looking for that retracement and then a continuation of the drop. So here we have that drop. Let's just go down one time frame to make it clearer. Now what do we see? We see the market stall here, and it started to retrace and create new higher highs and higher lows. Now we can identify possible areas of liquidity where the stop hunt will happen. So the first obvious area is here. Another obvious area would be here. And perhaps another area would be a zone here, just at these stops here. We can just about see it. If we go down one time frame, we can just about see it here. So we can see there was a movement. The market accumulated here and then continued on its drop. So we have the first possible area here, the second one there, and then an even better one higher up. So Let's go to the daily. It's a bit cleaner. So let's see what happens. So when it reaches our level, then we take an interest. So again, the market is accumulating here. All the retail traders are drawing their flags or triangles or whatever they want to call it, and then when it breaks it, they start shorting, placing their stops above. And really, this is just accumulation. We do not want to trade this, so it fakes everybody out. And now we've really created that W shape, that bottom. So this is an even stronger confirmation. At this point, we have everybody stops above. Everybody who went short has their stops above because they broke this accumulation triangle shape, which is all a retail strategy way of trading. As you can see, it's taken out the stops here, taken out the stops there in that liquidity zone. And very gradually retraces and goes up. Now we can see what's happened is, so this is the trend line from the, this is the trend line from that uptrend. So now we can see it's reaching our zone. So now, as it goes into our zone, let's see if we can find the manipulation. It's not breached the zone yet. What we want is we want to pass the zone, which it does right here. And we go down a time frame, and then what we see is on our zone we have multiple touches, we have multiple areas of liquidity where stops are being placed. Let's just stretch this out, it becomes even more obvious. Right, very respected zone, well respected. So now what we have is a breach above that level. So we got level traders trapped, we got breakout traders trapped, and what we can see here is a higher high being created and a divergence all the way from here and also just here. And this would be an entry. It's quite a wide stop loss, but the risk to reward is well worth it because we are expecting the lows to be breached. So the target is going to be quite, we don't know where it's exactly is going to be, but let's just identify the next levels. We have another level here, zone, so it will be, we're looking to trade it at least down to here, and if it breaches that, we got another liquidity zone here. Okay, which if it reaches our first target would be, what do we have here, a 6 times risk, 6 to 1 trade, and if it's even lower, 7 and 8 to 1. So that's a pretty damn good risk reward. Now our stop is above, and if the market breaches, comes back, stops us out, we simply wait for the next zone manipulation, and if that's breached, we simply wait for the next zone manipulation. So what we will have is, we will have, let's call it -1 R here, -1 risk. Let's say this next trade was a loss, that will be another -1 risk, and then this one, if it works out, what we'll be looking to get, if let's say that's the stop loss, we'll be looking to get about 5 to 1 at least. So that will be 5 -1 -1, that will be a +3 net. So that is how we'd be trading that. So there you go, this pattern, retracement. Now let's see what happens. Let's roll it forward, and we expect it to continue on its downside, which it has, and look how it just crashed right into that level. And let's see where the recovery actually started. It accumulated a bit more and actually carried on. Look at that. It is now 9-1 risk reward, and if you trailed it, we have 18-1, and even more than a 20-1. What a trade! What a trade! Look at that drop. Huge drop. The market lost 50% of its value. Now, at some point it turned around in 2009, I think, if my memory is correct. There you go, the market is stalling, and it looks like now it's about to change its mind. Now we're creating new higher lows and higher highs. And if let's just zoom out so we have a clearer picture. There you go, the market started to recover. And I think it went on from there. If we just... Yep, it went on from there to set new highs and continue on its uptrend. So that was 2018. Now let's compare that with $2020. So what do we have at 2020? Again, big uptrend. Everybody's stops are below these fractals, these lower points, and bam, it takes everybody out, all the stops cleaned out. Now we have the retracement. So let's remove this Fibonacci because we don't need it. That's just a reference point. What do we have here? Again, a retracement. We went past this zone. We have this next zone of interest, and the next liquidity zone would be up here. So now that we've actually reached this point, we have another zone actually up here. If we take all the contact points, that's another possible zone, but I do like the one we're at now because, as you can see, we have quite a few points of interest where the market worked around. It kind of breached this area here, so this is not entirely clean, but it is very clear. So we got this zone. Now we have the same kind of picture. We have that huge drop, we have the retracement, and now let's look for our manipulation on that zone. So what we want to see is a break above and manipulation continuation to the downside. So if that works out, we place our entry and a stop according to the rules. We have a certain place for the stop loss and a fixed place for the entry. Now let's just zoom out and see where the crash can go down to. So what did we have here? Before we had about 20%. Here we had 33% loss. So we're expecting at least a 50% loss as a bare minimum if 2008 is anything to go by, which would take us down to here, which is 1,800, and possibly even lower, dare I say it, which would be the next zone here, 1,500, and that would be, what would that be? That would, yeah, 53% loss. So if that's the case, our first profit target would be really be at least these lows, these previous lows, which would give us around about 3 to 1, and I will be trailing it. So I will look for a minimum of 1,800, which would be a 4 to 1, and this low here would be a 5 or 6 to 1, depending on where the stop loss, how accurately you get the stop loss and the entry. Now, does that mean that because of 2008 it's going to manipulate like this as well? No, I don't know. It could go up here and do it up here. It could go even up there and do it there, which would be an even better price for us because we have an even bigger move down. It could even, who knows, we're living in strange times these days, it could even come up right up here, even though it makes no sense at all why the market would do that, because of the economy. However, to be honest with you, who knows, it is manipulated after all. Now, it looks like we already have, as I pointed out in 2008, divergence here as well in the RSI already, so I wouldn't be surprised to see a higher high here and the divergence to be maintained. So that's how I would go about it here. We are already at the point where it's about to turn around, and that would be how I would trade it. And let's just take a look at one more thing here. Let's look at the Japanese market and look how similar that looks. Again, zone with all these contact points. And we would look for manipulation here, similar kind of picture really. The next zone of manipulation will be the liquidity up here, and we will look for our pattern and entry, and then taking it down to the next levels. Next level will be here, that's a zone, and then after that there's one here. So as you can see, kind of a similar pattern on the Japanese market. But the stock market, yeah, we are getting very, very close. I don't know if it's going to happen this week or next week, or if we go up even more. I wouldn't be surprised, because if you actually look at Netflix, which is one of the top stocks, unbelievably, it went higher still. It created a new high in the midst of this crash, in the midst of this corona nonsense. So, can you believe it? A new high. How does that make any sense? You tell me. Tesla shooting up again in the midst of this crisis. McDonald's still going up somehow. Google also going up, but not as quickly. Facebook gradually coming back up in the retracement. Amazon, unbelievably, a new high. Look at that. Look at that humongous shift. Where is the money coming from for that move? How is that real? You tell me. How is that real? Here's that level, and here's that breach of the level, and that looks to me like a manipulation with divergence. So, I mean, makes no sense at all. Let's look at Apple. Apple's going through the retracement just as the stock market is. Yep. If you wanted more proof that the market is manipulated, here you are. There it is in front of your eyes. And yep, that is it. So if you want to take a screenshot, print this out, get ready for the next wave. And this wave, which most people call in Elliott wave theory, if I get the, let me just get the waves up. Where are those Elliott waves? Yeah. 1, 2, and the big move is 3 if you trade Elliott waves. So the biggest move is always 3, but we don't do Elliott waves here at the Peaceful Trader, so I'm not going to bother. However, this is so that we know what retail is looking at, and actually waves have some validity, but I don't use them. So there you go, big move down. That's it. So that was a quick analysis of the stock market, S&P 500, and how I would trade it based on our strategy. Thanks very much, and happy trading. And as always, manage your risk, and you're always at risk of losing lots of money. So take care. Peace out.